In today's show, you'll hear investor perspectives on the COVID-19 impact on startup fundraising. This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. It's the time of COVID-19. We're in lockdown looking to reopen the economy in the U.S. The virus has changed the way the world looks with empty streets, shuttered stores, and death counts rising. There are signs of flattening the curve, so we now look to the other side when the economy will reopen. I hope you enjoy this episode. Our guest today is Evan Cohen of HealthBox. So what new investment thesis will we see in general from the COVID-19 pandemic? What do you think we'll see coming up as new areas of investment?
Yeah, I think there's already a lot of momentum around the increasing acuity in home-based service delivery. And there's just a huge shift in the acuity of care in the home setting, which was a trend that preceded the crisis. Whether it's urgent care or specialty virtual care like cardiac care rehab programs, at-risk providers and payers are realizing that they can provide high-quality care in the lowest cost setting. And that's also the setting that the patient wants to be treated in. And in the current climate, it's the safest place for the patient to be, especially when you're thinking about immunocompromised patients. You know, you see this trend clearly in place when you look at the quarterly results of a company like Livongo, or, from a policy perspective, the way that CMS is changing their telehealth stance.
Great. And so what startup sectors do you think are going to be diminished or eliminated by COVID-19? What's going down and what's going away?
Yeah, this isn't quite a startup sector, but I will take the corollary to the investment thesis that I provided. I think skilled nursing facilities are going to be very challenged over the next several years as COVID remains a big risk to safety. Obviously, there's a ton of headline risk here, given the unfortunate number of deaths in nursing homes over the last couple months. That's also causing a big negative impact to occupancy rates. And, government pay, which dominates this space, you'd expect state and federal budgets to pressure reimbursement, where at least on their Medicaid book of business, they're already losing money. Facilities are going to have to shrink their bed counts to adhere to safe social distance practices. And unfortunately, I think there's probably going to be an army of lawsuits that are going to hit operators that have made those headlines.
And so what other areas do you think we might see changes in? I've noticed that groups like Medicaid don't let you use any telehealth or teledistance applications in healthcare. Do you think we're going to see changes in the law around those things?
I expect there to be long-term changes in telehealth regulations. It's interesting because the telemedicine environment has been restricted for so long and often without a ton of rhyme or reason. One example of that is state medical boards that enforce that a doctor needs to be certified in that state in order to be able to treat those patients. And you've seen, some tailwinds over the last couple of years, particularly around nursing compact states coming together. I think that acceleration is going to continue. Potentially, you could see CMS kind of stepping in and forcing those state medical board restrictions no longer persist. That's happened here during the COVID crisis. Unclear exactly which aspects of that regulation restriction will persist over that longer term period.
That's great. I also understand you can't use Skype in a medical application because it impacts HIPAA compliance. And I go back and look at HIPAA. It was developed in the mid-1990s, and here we are so many years later. And I wonder if we've really updated those laws since then. So it sounds like there's going to be a major overhaul of most of these laws for that reason.
I think that's right. there's been a relaxation in HIPAA around telehealth. I think that will likely snap back, but there's a ton of updates that need to happen to HIPAA, particularly as you think about the new interoperability rules. Mm-hmm. And I think that's really been a catalyst to that discussion.
Great. Well, the last few minutes that we have here, what else should we cover that we haven't?
That's a good question. I think from my perspective, if you just take a step back and think about, digital health environment, if anything, my view is that the conviction around this particular space is going to persist. Clearly, there are going to be near-term tailwinds to deal activity, but I would be encouraged to only build conviction during this environment. The use cases that we've talked about for so many years and executing digital health strategies has really come to the fore during this period. Even amongst those companies that aren't growing so significantly, they're being leaned on to provide solutions and value to their customers. So I'm pretty encouraged by the environment and expect that things will pick up.
That's great. Appreciate you taking time to talk today and hope to have you back for a follow-up soon.
Great. Thanks, Paul.
Our next guest is Kevin King of the Texas Halo Fund. What new investment thesis will the COVID-19 pandemic give us?
You got all these crystal ball kind of questions, but I think some of our experiences in the last couple of months are going to stay with us for a while, and some of them are just going to support things that we already knew were happening. I mean, online shopping with delivery, takeout foods, all of the conveniences that we were used to before and have been magnified in the last couple of months, that's all here to stay. It would be extremely difficult for me to get interested in some sort of retail, restaurant, anything along that line. Another one that I've personally had experience with was a telemedicine visit that unbelievably convenient. Started exactly on time, was very quick, to the point, and very reasonable. All of those kinds of experiential things that can be done remotely will be there. I think there's also going to be an emphasis on increased inventory maintenance. So as opposed to just in time. So many people were relying on just in time delivery and they got burned. I'm personally involved with a couple of hospitals, one of which had the inventory. They responded very well, others of which were just in time and they were hurting. So I think you're going to see more of that. I think you're going to see a pivot from international sourcing to domestic sourcing. We have two portfolio companies that were working in China, both of which relocated. So they were able to do that during the middle of the coronavirus, which was amazing. But I think you're going to see an increasing reliance on domestic sources. I mean, the same B2B SaaS and web-enabled everything will continue to be strong. There's, anything at home, entertainment, home improvement, furnishing, anything that can be done in the home is going to be extremely popular.
No, I agree. I think we're going to see a move away from the just-in-time inventory to the robust inventory model where you never run dry and you can shift from one source to the other as well. Because just-in-time, it takes all the cost out of it, but it leaves you without any supply sometimes. And I think people are going to trade that off for a robust supply chain down the way itself.
And eliminate the sole sourcing that's been going on so much, just like you said. Yeah, absolutely.
Great. And then we also hear a lot of people talking about, have you COVID-proof your business? Can you work in a lockdown? Can you continue if your customers, are no longer able to work? And how do you COVID-proof your business? And how would you see that playing out?
Well, I think that people have discovered that they're more COVID-proof than they ever visualized they were. I think people thought that it was not possible to do a lot of this remotely. That is being done remotely. We just funded an investment 2 weeks ago. The company's out of North Carolina. We have never met them. Never met the people. We introduced to them remotely. We talked with them multiple times remotely. We did our due diligence remotely, and we funded remotely. And that's the first time we've done that. So I think that's interesting. I think I have a personal experience in my family. My son just got a job, has never met in person with the people at the company. He was interviewed remotely, onboarded remotely, and has not come into the office. So I think there's a lot more. I think we're discovering that we are able to do things more than we've ever thought that would be possible.
And so, what startup sectors do you think will be diminished or eliminated by COVID-19? What's going down and what's going away?
Well, we haven't invested in any, but we've seen a lot of travel apps over the last year and a half. I don't think we weren't doing travel apps before, we're not going to be doing travel apps now. I don't know how soon people are going to be interested in hopping on a cruise ship or sitting in a metal tube, breathing recycled air from 100 strangers anytime soon. So I don't think those are going to happen. But on the other side, still on this travel subject, RVs, any kind of thing where there's personal or family travel that limits interaction, which raises all of the marketplace questions about all the marketplaces. And we do have a marketplace-based travel app. Now, it got hurt, but not too badly, and it seems to already be coming back. But there's a philosophy of there's going to be some people who have no interest whatsoever in sharing houses, hotel rooms, cars, planes, swimming pools, whatever, with anybody else because of the cleaning issue. But then on the other hand, the opposite side of that, you're going to have people who say, well, I'd rather stay in a home, the Airbnb, VRBO model, rather than a 500-room hotel. So I think it's not clear yet which way that's going to go. But those kind of applications, I think, are in trouble.
That's great. Well, thank you for joining us today and hope to have you back for a follow-up soon.
Always happy to visit with you all.
My next guest is Rodolfo Dick, Managing Director at Prosa Ventures. So what are you doing to prepare for the market after the lockdown finishes?
That's an interesting question. So, we are in a relatively good situation in that we just launched the fund last year. So we've been working on some deals that we had in the pipeline, trying to close them and analyzing how they're being impacted by the lockdown. After the lockdown, what we are preparing for is to keep a close eye on the demand shock. I think that's something that people are underestimating right now. I think the shock right now was mostly on the supply side, but going into Q3 and Q4, we are trying to see how bad consumers are really impacted and how they're going to react to the opening and what kind of behaviors might change due to this situation. We believe that unlike previous crises, which were financial in nature, this one is more biological and it will definitely change the way in which we think and do many things. So there will be some permanent changes while others might remain the same in the long term. But we're preparing for that, just to keep a close eye on the trends, especially in the mobility space where we're playing, to see how people react once the economy is more open. I mean, we know that some states are already reopening at some capacity levels, but we have to see after this is all said and done how people are going to react to the situation.
And so how much demand supply will reduce in the post-lockdown era? By how much will sales go down, do you think?
Well, we've seen some sectors being impacted up to 80% or 90% of lost revenue in these couple of months, especially in the mobility space. We saw the Uber earnings release a few weeks ago. I can't keep track of time anymore. I don't know if it was last week or 2 weeks ago, but they lost I think 70% or 60% of their ride sharing revenue. Mass transit is losing 90%, up to 90% of revenue in some countries, in some cities. And in mobility in particular, micromobility has gone down 80%. Van pooling systems in Latin America and emerging markets have gone down 80%. So I think it's been a wide array of impact in different industries, but it's anywhere from 30 to 80%. I mean, there are some others that are being benefited, like delivery services. We see Amazon and some other last mile delivery companies having increased volumes up to 30% month over month. So, I mean, there's always winners and losers, but it's been a huge impact across the board.
And when the lockdown is over and we get back to what will be a new normal, what do you think the demand rate will be at that point? It'll be reduced, but by how much? But after we get back out of the lockdown, where do you think those numbers will bounce back to? Probably not all the way back up where they were, but some ways. Where would you peg it?
Yeah, I think there's been some discussions going on with many analysts and people with way more experience than myself. And they've been talking about potential V-shape recovery, U-shape. I think it's going to be a slow recovery. We've seen, I think it's close to 36 million people apply for jobless claims in the US alone. I think the demand shock is going to be there. I think it's going to take a good time to recover to pre-COVID levels in some industries. I would say probably the demand right away might come back to 30% below to where it was before COVID, with a slow recovery towards getting to that pre-COVID level and maybe surpassing it in a couple of years.
My next guest is Dan Kerr from Flyover Capital. So what are you doing to prepare for the market after the lockdown?
Well, I'm looking forward to getting out of my house and going on vacation at some point. But seriously, I mean, we really kept pretty busy anyway. You know, like everybody, we're having lots of remote meetings. We are geared to be able to do that anyway because we work remotely a lot of the time. You know, I do think that, I mean, we've been able to get business done. I'm still a person that thinks, you know, we can't go completely virtual, especially at the early stages. It's so important to be in front of people and building relationships that I'm looking forward to getting on the road again. It will be months before that really happens. There's still virtually anything scheduled out there is not a physical conference, or it's hard to even imagine getting out to a coffee shop to meet with somebody. So hard to plan yet, but that's the thing that I'm really personally preparing for.
My next guest is Yaniv Snor, founder of the Mid-Atlantic BioAngels. And so we're coming to the end of the lockdown and the market's reopening. And what are you doing to prepare for the market after the lockdown?
You know, we're not doing anything special. We just expect, it'll be nice to meet people in person again, even though a lot of my members keep telling me that they want to stay home. They don't feel like taking the train for several hours, because some of our members travel sometimes for an hour and a half or two to get to the meeting. And they're like, it was pretty nice right now to not have to do that and get home at midnight or whatever it is. So I'm going to have to deal with people's psychological expectations and bring back the in-person meetings, which of course provide a lot more than you can get out of a meeting over Zoom with, 40, 50 people. It's a different kind of interaction. But, we learned a lot from it too.
You think you might do a combination, some Zoom and some in-person meetings, more social in person and more due diligence style in meetings, large group meetings when you have to have the visitors travel in and fly in and so forth? Or how do you think that might work?
We have already pre-pandemic incorporated both in-person as well as Zoom. We've been using Zoom for many years now and other types of virtual meetings. I think we've learned how to use them better and how to make much better use of them. So post-pandemic, there are different tricks, if you will, or different ways we would employ the same tools, given what we've learned or been forced to learn during the pandemic. So, but there still is a huge benefit to be able to be in a room and to see how people interact with companies, what kind of questions they ask, get a sense for a person and the kind of contribution they can make in a group setting, which is more difficult to do over the phone or even when you don't see them than it is to do in person. So we'll have to have the in-person component, but we'll be able to implement effective non-in-person components as well.
My next guest is Gary Trauner, Executive Director of Silicon Qua. So what are you doing to prepare for the market after the lockdown? What are you doing now to get ready for when the market comes back?
So we are working with our angel group administration and with our angel investors to refocus, give ourselves a renewed focus on our investment thesis. Back to the points that I was just mentioning, we're examining what we think our viable investment thesis is going forward. And it goes back to management and balance sheet and valuations and scrutiny of industries a little bit tighter, and making sure that as we move forward or when things do start to loosen up again into whatever new normal means, we're sticking to the plan. And we're really looking closely at that renewed focus, and those are going to be our touchstones. And I think we're going to be much more clear on the companies that we're interested in based on those touchstones. So that would be the first thing. And then I would say the second thing is, again, we tend to be regionally focused, but we want to look at companies that we know have a vested interest in the markets that we're comfortable with, and that's our region. So I think we're going to try to, hunker down may not be the right word, but we're going to get our blinders on a little bit tighter in where we look at our companies and where they're doing business, and to make sure they're doing business in places that we feel comfortable.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.